Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today we're going to have a look at the 17th Commitments of Traders report of 2013. As usual, we're going to start off with the changes in commercials positions, and we're going to open rough rice first, where we had a 30% change in commercials positions. A larger 47% change can be found in the large speculators positions, so we've got pretty large changes, although you can see on this 1 year's chart that it's not that unusual to find large changes in rough rice. The interesting thing is how this large change happened right after a price decline, and we can see what happened to prices after such large changes. The last one happened a few weeks ago, and it was a really large change size and beautifully marked the end of this decline over here. The one before can be found over here, a bit larger than average change size, could push prices higher. Then we've got one over here, actually two following each other, and again a similar example back over here. So changes do affect prices in rough rice. So that's one of our bullish signals this week. Let's have a look at the 5-year chart and see whether we've got an extreme in rough rice. And yes, we have one. If you look at this 5-year chart, you can see that commercials are at pretty big net long territories, and this may signal again a bottom in prices, and we can see prices go higher from here. The last few, I'm just going to show you a few cases when commercials were at such levels, and that could actually push prices higher. So this is basically our second large signal in rough rice that's telling us prices will or may go higher from here. The next market is NASDAQ, where we had a 26% change in commercials positions, a 35% change in large speculators positions. You can see the change size over here, larger than average. What's interesting in this market is that we see a very intense rally, and question, of course, is would this end? Do we have any signals that's going to show us this will end soon? Extremes. Well, you can see here on commercials positions that we're a bit away from really large extreme levels. Of course, we can always talk about relative extremes. It doesn't mean that we're going to see prices continue their rally just because we're not at that level. Of course, this was a beautiful sell signal. Large speculators are a bit closer to their most extreme levels, so that may signal a end in this rally. But anyhow, this isn't a all-time or very close to all-time extreme in NASDAQ. But let's move on to S&P 500. This may tell a bit more about the story in indexes. We have an all-time signal over there, so we're going to open the 5-year chart right away and see this extreme. So large speculators are at their all-time levels. Commercials are also in extreme territories, 323 report extreme. I would say it's basically small speculators who are basically neutral, not really in extreme territories. So this picture in itself is telling us we may see prices decline soon. The last extreme was actually an opposite signal. It was a bullish extreme. You can see that was a really nice signal from the COT report, and that put an end to this rebound that we've seen in this rally. Let's move on to large speculator COT extreme. Here we go. We've got, of course, S&P 500 on top. We've talked about it. So let's move on to gold. We have a 229 report extreme in large speculators positions and also in commercials, and a 637 report extreme in small speculators positions. So here we go. Let's open a 5-year chart and see this extreme. Interesting. Small speculators are net short. We haven't seen that for the last 5 years. Let's open a 10-year chart and see, do we see small speculators in net short territories on a 10 years time frame? And no, the answer is no. So we haven't seen small speculators being so pessimistic. For 637 report, I would say this is a very close to all-time extreme in gold. That's a very interesting case, and I would say this can be considered a very bullish signal. Moving on to gasoline, we have a 81 report extreme, not that large. Of course, we see larger numbers pretty often, but still, anyhow, this is an extreme, and we've talked about it last week. There is a extreme in gasoline. Here we go. You can see the extreme over here. The last large relative extreme was back here in, I would say, July 2012. Put an end to this decline, and we've seen prices rally since. An even larger extreme, you can see it over here in 2010. So we may actually see the end to this decline over here and find prices going a bit higher from here. We've talked about NASDAQ 100. Okay, let's open cocoa, our last market that we have time for this week. Here we go. We have a 20 report extreme, nothing too unusual. Let's open the 5 years chart and see the extreme over there, if we have one at all. Well, we are getting closer to one if we look at the chart over here. But of course, we still have some space left to really get to those all-time extreme levels. We had a relative one over here that pushed prices higher. And of course, if you look back at this extreme, this was a bearish signal, and we may get close to it in a few weeks. So may see prices go lower from there. But really, there's nothing too special to talk about in cocoa. So that's going to be all for this week. I'm not going to show any more COT charts, but you can have a look at them at our COT charts page, or you would, or if you would like to have a more detailed analysis, then you can check out our COT analysis page in our subscription service, where you can add other very useful functions to our table, the long-term trend, volume and open interest scores, or the COT index. And of course, you can have a look at the new COT report types, for example, CIT, TIF, disaggregated, or of course, the futures and options data type as well. So I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.